This is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy, and this is the training video 28, Ascending Broadening Price Pattern, and this is on gold XAU USD. Okay, so what do I see here? Well, I'm just scouring the charts on XAU USD. This is gold here on a monthly chart. I'm just going through it. There's nothing on here to immediately jump out and say buy or sell. As we said before, you don't always have to be in the market. You don't always have to be a buyer. You don't always have to be a seller. Sometimes you just have to wait for your opportunity. Like Mark Weinstein once said, pretend that your price chart or your trade is a sick, lame antelope, and you can then pounce when the time is right. Only wait when your prey is sick and lame, and just wait behind the bush until the time is right. That's roughly how it goes. But this is the monthly chart, and what I've seen here is not a precise setup on the monthly. We've seen a low here that we saw last December the 3rd on 2015. We're now at 23rd of October 2017. We saw this low here, and we've seen a nice rise up. It's not a huge rise, but it's a solid 30% rise, and then tail back off. But what's happened on a monthly, and remember, the longer term setups apply on a monthly chart, and they take longer to set up, but then they last for longer. Remember the suntan analogy in previous videos. Now this bottomed out. It's made a high of sorts here above 1370 and sold off, but it sold off towards the 1140 mark, whereas it's bottomed out at 1045 here in 2015, December the 3rd. But this has made clearly a higher low, hasn't it? So it's 100 pips higher than where it made this low back in 2015. So the low it made here in November 16, pretty much a year later, it was 100 pips higher. Now this tells me it's sort of a head and shoulders, if you like. We've got one shoulder here, the head here at the top at 1370, and pretty much the right shoulder is higher and it's sloping up. So we've got that bullish precedence there. Again, it's not with that second, it's not a lower low and it's leaning to the downside. It's not that lean we've got where it's just leaning to the downside and it's looking quite bearish. We've got this leg up. Now that's on a monthly. That's what tells me, well, you know what? We seem to be in the beginning. I say the beginning, we're a few months in, but we're still playing this out, and it seems to be a potential strong bullish pattern that's about to emerge. Now that's not an immediate buying opportunity, but what struck me is indeed the ascending broadening price action seen on the daily. Remember, we come back to the daily for a lot of these, and what I like about this, I'm going to come off the bar chart and go onto the candlestick. Now I'm going to zoom out, and I want you to see this. Now what we see here, I'm just going to make it a little bit more obvious, and I'm going to double up the trend lines top to bottom. Now what we see here, pretty obvious, is an ascending broadening price. Now what is so obvious about that is that it starts off narrower and gets broader. Now you can see it's not extremely narrow. I could have drawn this slightly narrower if I wanted to, because we could have then ended up here. I've actually cut into the highs slightly, so it could have been tighter down here. But all the same, I think it's clearly obvious that it's getting broader. So the highs to the top bar and the lows, the perfect bounce off the bottom range, is these moves are getting wider. Now for me, when these moves start to get wider, unlike the previous video on dollar yen where we had the descending triangle on dollar yen, previous video we had the descending triangle, signs of the pending collapse, whereas that was getting narrower, this was the reverse. That started off wider and then it was getting narrower. We had the base at the bottom, and then it was getting tighter moves looking to sell off and break down, like the coiled spring effect. Now this is the opposite to the coiled spring effect. This starts off like that and gradually allows the price to move in a bigger range. Now what that says is when it sort of meets a type of low, the next move is going to be bigger than the previous. Now this could carry on for weeks and months from now. Now a good sign is that it's already seen one or two bounces off this high channel. We've seen one here and one here. Again, like the monthly where we had the slightly sloping bullish head and shoulders, we've got, this is pretty much it, the higher low, and seen on the daily. Okay, so we've made a low here. We've not bounced off this higher trend line here, this trend line at higher levels. We've literally bounced off where the moving averages are, and they're also converging as well. They're getting tighter like a coiled spring, and this is what I like. This has formed a base here, and I think any bounce or support that's seen, pretty much we're right on the cusp here at 1280. This could pave the way for much, much higher prices. And as you can see here, the potential for a massive move is perfectly obvious. We've not got to go on a longer time frame here, longer time frame chart. We can just simply zoom out and assess the potential of where this potentially could go. I see this, if we remain in this range, but the lows get higher, I mean, we could essentially get up to the point where the lows come in at 1320, and the highs come in at, you know, above 1350, 1400, and it gets to the point where we get up towards that 1500 level. For me, the ultimate price target here over the coming months is roughly here, anywhere between 14, sort of literally 1500, 1498, 1505, up towards that top end 1550, and that's pretty much where this sort of does cut off. Obviously there's only so far I can go on this chart, but that's a mid-round level 1550, and the main reason for that is, I'm looking back again, remember to look back on these charts like we do, assess previous highs and previous support and resistance. Look at where this market was back in 2012-13, where it bounced off this as a support, rallied higher, and then absolutely crashed down through this level to end up going on to make newer lows, 5-year lows. So this level here, this 1550 level, is an ultimate target. I believe we're on our way. It could take weeks, it could take well into 2018. I wouldn't be surprised if we see this at least by February, maybe even sooner, possibly the end of the year for gold. And that is the target. Yes, it will probably be met with harsh, aggressive selling when it hits that point, but it's all about the setup. Remember, it's not just about a gold opportunity here, it's about what we're assessing as the setup. This is the training. You're assessing something that's potentially bottomed out. It's a higher low when you zoom out of the chart than the previous low, which it is, and the market started off quite tight and rangy, and then it starts to spread its wings on bigger moves, and now we've come down to a low, and we could start to see higher levels, most certainly. And 1550 is my target purely for this reason here. Big volume coming down through this level, and moving averages falling harshly back 4 years ago, well, nearly 5 years ago. So that's my target, ascending, broadening price pattern. You start off narrow, and similar to a megaphone, the range gets wider, allowing the price to move its legs and possibly arms, all its body higher north to very good prices, and definitely 1550 is on the table. Okay, on to the next one. Thank you very much.